Number 4, misconception. I make really good money, so I'll definitely qualify.
Yeah. So this one's fun. When we do our online applications, it gives people the opportunity to fill out their finances, what they're making, their work history, right? All of that good stuff. What people don't understand is their earnings and qualified income is very different. So it depends on how you're paid. It depends on how often you're paid. It depends on the type of employee you are. So if you are a 1099 employee versus a W-2 employee, it's looked at different. If you were a W-2 employee and you're now a 1099 employee, it's not the same. So a lender is going to look at how you're paid, when you're paid, what type of payments you're receiving. So the easiest people to qualify, the easiest one for you to look at your pay stub and know, okay, this is, because again, there's calculators online. So we'll get that all the time. Well, I did a calculator online and it said I was qualified for X. I'm like, ooh, well.
A lot of times those mortgage calculators don't put in there the taxes and the insurance part of it, only the interest and the principal.
Yeah, and you're looking at your income as a whole. So if you have someone that makes overtime and bonuses, we actually can't take those at face value. So the only thing we can take at face value is if you're a salaried employee or if you're an hourly employee working consistent hours. So if you're receiving any type of overtime, if you're receiving any type of bonuses, that's going to be an average over a 2-year period. And then you take the most conservative number. So you could have had a killer month in, August. You could have had a killer month in July, but we're not going to take that killer month in July. We're going to take an average of the last 24 months.
Yeah.
And then also you'll get people that are like, well, I'm working 2 jobs, so I have income from both. Well, on an FHA loan, if you have any gap in employment, guess what? You can't use both of those jobs. You're now only using one job. So you have to be consistently working both of those jobs for 2 years. And again, any gap, you're talking, say you have a 6-week gap, we no longer can use both of those. Like sometimes there's ways around it. So qualifying income is going to be different than what you are earning on a monthly basis.
And using that one big bump month is actually going to protect you if you don't use that. You use the 24-month period because say you don't get that again. All of a sudden, oh my gosh, now I've got this big payment I can't afford. So it's good to do that 24-month.
Yeah, it's why you're
24-month average.
Yeah, why you're taking, and again, you're taking the most conservative value. Right. Because you want to get people in. The goal of home ownership is to keep you in your home. We never want to set you up for failure. Where it's like, I don't want to put you in this house if you are barely scraping to make it in, because it's like that doesn't serve you. It just stresses you out, and home ownership shouldn't be like that.
Yeah. We don't want to make it too easy. I mean, we had the 2008 thing where it was super easy to get into homes, mortgages, and look what happened, right?
And
it crashed. So it's good to do more conservative. Now there's regulations also and all this stuff where you can't do that anymore.
Well, and underwriting has cracked down a lot. Like loans are a lot harder right now. So I have not been in the industry for 30 years. I have people that have been in the industry for 30 years and we're talking about it and they're like, oh, yeah, mortgages are not fun.
Compared to the past.
Yeah. Like they happen, they work all the time. And they're really unique because I think it's just different because people get paid differently now.
I want to change it from harder to safer.
Yes. They're protecting you better.
It's not harder to get the loan. It's now safer to get the loan.
Yes.
It's different than the past where it was very easy to go under. You go into foreclosure now where now it's safer.
Yeah.
The regulations are more strict because we want you to be safe. We want to have you keep that home. We want you to build the generational wealth where in 20 years, 30 years, when you sell the home, you've got money to retire on now. Yep. Which is what my retirement package is, my real estate.
Yeah. It makes a huge difference. And so you'll get that where people, so if you are thinking of buying a house, just keep that in mind when you're making a job change. If it's, okay, I want to buy a house sometime in this year. I have the opportunity at work to go from a W-2 employee to a 1099 employee. Well, I'm still employed by this happens. I'm still employed by the same company. I'm just going to go 1099.
which happened to me, actually. That's my job was I did that exact thing when I bought my house, too.
Yeah. And you're like, no,
Yeah,
just wait until you close and then you can change.
It got a little bit scary when it happened, but yeah, we made it work, and I did get the house.
Yeah,
This was 12 years ago, but yeah.
Well, and you can it can work. Like I had a client that they had he was W-2'd within the last year. So he had a full year of 1099 and we were able to make it work.
That was the same with me. I was about a full year of 1099.
Yeah, but again, then you're taking your year of earnings on a 24-month average. So it changes your earnings quite a bit.
And I had to get a letter from my employer saying, we really love Micah. We've been working with him for a long time. We're going to continue working with him. And that helped underwriting, saying, okay, this guy's good.
Yeah. So it just adds a layer of, just another layer, right?
Yeah.
Like it is what it is. It adds a layer and we deal with that as it comes. But again, if you're thinking about buying a house, maybe just pause with the type of employment. Like maybe don't make any jumps until you talk to someone.
Yeah, that's what I was going to say. Talk to Holly first and then make your decision which way is the best way for you to go.
Mm-hmm.
Yeah.
Or, okay, briefly, 1099 employees, we get this all the time. They want to buy a house. 1099 employees are notorious for writing off everything. So if you are a 1099 employee, we don't look at what you actually earned. We look at what you told the government you earned.
Yeah, I made that. I don't know if it was a mistake or not. I tried to refi, but I wrote off so much stuff that I didn't qualify.
You showed you had no earnings.
And then I told my lender, I was like, why didn't you tell me this? Like, we can't tell you this. We can't. You got to do your own thing.
Well, yeah, because I'm not a tax accountant.
Right.
Which is why when I have, like I said, I had a client where it was that discussion where it's, hey, I'm 1099. What do I need to say I made in order to qualify for that? We can look at numbers.
When I say the lender couldn't tell me, it was the lender couldn't tell me how to do my taxes.
How to structure it, yeah.
How to structure it, exactly.
That it's, we roughly know you need to, in order to qualify for this payment, you need to have been earning this. This needs to be your average. However you do that on the back end, talk to your accountant.
Yeah, so not to say that Holly won't give you information.
Yes.
I'm not saying that.
Yeah.
What I'm saying is that they can't tell me how to structure my
I will
taxes,
send you to an accountant
because
I did not get my CPA, and I don't want my CPA. Right.
So, yeah, I just wanted to clear that up. She will tell you everything she can, just not how to do your taxes.
But yeah, that's a big one, is you'll get people that are 1099. And they're like, I make great money. Yeah. Like, well, you told the government you made a third of what you actually made.
I thought I was saving money. And in the end, so that's, again, talk to the CPA, talk to the lender. Which way is the best route? Because I thought I was saving a ton of money by just writing everything off. When I look at it from a different perspective, if I would refi it into a lower rate, I probably would have saved more money going that route instead of writing everything off.
Because it's going to be very dependent, and again, it can be a short period of time where it's like I did great in 2024. I'm just going to show this total earning in 2024. Yes, I'm going to get hit with taxes, but this 24 is going to be enough to utilize that as my 2-month average. And it's going to be okay, and it will work out. So it's again, just being mindful about that. If you're that type of employee, if you want to buy a house within the next year to 2 years, just be mindful about what you're writing off.
Sounds good. Good stuff to know. All right, let's go to the next one.